What's up, everybody? Good morning. Welcome to Trading Live with Bubba. And well, I tell you, it's been a crazy couple of days in the market. We really just stayed in consolidation. If you want to look at the bigger picture first, here's the S&P. Okay, tried to break to the downside here, and here we are right back in consolidation. So even though we're making lower lows, we haven't been able to break down. There's a lot of reasons to believe that we're going lower, but until we get confirmation that this market is broken below consolidation and stayed below, it's the same. That goes for the Dow, which is once again now pushing below. Okay, but right here. So until we break down, everything looks like it wants to break down, but we have not seen a breakdown yet. So we have no confirmation. So until that happens, and otherwise we will continue to assume consolidation. Now, of course, that's on a daily chart. On a 4-minute chart, which is what we day trade with, right now we have nothing to do. We're sitting here watching. I'm actually long gold from 5094 based on the Trade Assist software. But for us, we need the market to either run up or run down. Right now, we're just hovering around the mean in all the markets that we trade right here. So that means that we have nothing to do. Okay, that means that we have to wait until we trigger a signal. But you can see there was a sell here in the NASDAQ, which worked out pretty well, a sell here in the Russell, a sell in gold, which worked, in crude, which worked out, a buy in the S&P, which didn't work out, and a buy in the NASDAQ that didn't work out. But they did get to break even. So again, but it's what you're focusing on. And right now, on short-term trades, you need a reason, you need an edge to kind of trade that. And I think that's the important thing to look at. But for now, there's nothing to do. And I can see in another screen if something changes. So let's take a look at some of the stocks we look at and see if there's anything to do there. Apple, no, we're hovering around the mean. We don't get involved unless we're overextended. We don't care what side. We're not picking a direction. We're letting the market pick direction. So if we're oversold, we're going to be a buyer. If we're overbought, we're going to be a seller. So Apple, nothing. Amazon, nothing. Right at the mean. Now it's getting close. I mean, Amazon would have to rally another $5 or $6 to be a sale, but there's nothing to do. Okay. But if you remember, we did buy Amazon back here. Okay. Coin, charging higher. Coin is getting close to being a potential sell. Now, I'm not going to be overly aggressive here because of the slow speed in the market right now. A little bit more of a rally, I'd look to be selling call spreads here. Okay, but again, I'm talking like about 220. So we still need quite a bit of room to get up there. And the other key, when you're looking at like the Bollinger Bands, overbought, oversold, you also need to have it where the speed of the market, because if the speed isn't there, then they never really reach the Bollinger Bands, because you can see, for example, on coin, the bands are turning up. So unless we get a quick charge, there won't be enough speed to trigger an actual trade. Crowd, which we bought last week as well. Look at that. Bang, straight back up. Now, again, obviously, we need a much bigger rally. But this is, if you've noticed, we're hitting about 80% on this call on our put spreads and call spreads. And that's all we really do. We don't make a lot of big trades. All we're looking for is to grind out some premium while we're also waiting to potentially day trade. So as we just go back to make sure and take a look, there's nothing really here. So, okay, well, so we'll go back and check the other picture. ETHA, dead solid in consolidation. Once again, it hasn't broken out. It hasn't broken down. Okay. Certainly, I'd like to see it go higher. I do own it, but in the meantime, there's no trade there. Meta, right at the mean. So once again, now the long-term automation did make a trade on this. Again, we didn't make it, and I don't use this Trade Assist. In fact, I'm going to turn it off. I don't use it on these charts, okay, because I'm just selling premium here. But it did trigger a sell on this overbought, as you can see. It's actually really pretty great software. It triggered a buy here. You got a straight up rally. It triggered a sale here. And you got a straight down move. And that is really the blow off pattern in which we used to trade manually. And all I've really done with it is automated it so you can see it more clearly. Google, after that monster rally, there's no trade for us, but it's right on the cusp of breaking down from some support. So what you're really looking for is a bigger sell-off, a rally back into the resistance level, to then to be able to sell it. But right here, there's nothing to do. Let's just go back here and take a peek, see if there's anything for setting up. We're nowhere near anything setting up, so we'll go back here. INOQ, India, Oscar, November, Quebec, right on the mean, no trade. IWM, getting close, but again, it needs to come down, back below 255 for us to be a buyer. We're certainly not going to be a seller here. We're going to sit back and let it trade out. MP, same thing. So you're seeing consistently a lot of stocks that are right around the mean. And all that means is that there's not much opportunity. There's not much to take advantage of from our perspective. Okay, what we're looking to do is to be able to take advantage of a market that is overextended one way or the other. Okay, that is the blow-off pattern in a nutshell. Okay, MSTR, very close, but one like crude, it needs, like coin, it needs a little bit bigger of a rally. Okay, but you can see we did actually sell put spreads back in here. Okay. Nothing this week. We have one open trade this week. That's a winner. Okay. From Tuesday. But here, Netflix, maybe, but it needs a little bit bigger of a rally. NNE, nothing. Right at the mean. Hold on one second. Okay. Nugget, which we haven't traded for a while, but again, look at that. Nothing. As big as it's moving, there's nothing to trade. NVIDIA, right at the mean. Palantir, which we did buy a couple of weeks ago. Look at that. Once again, we found a reason. And remember, when you're trading, you want to find a reason to make the trade. Okay. Trading isn't just about how often you can trade. Trading is about finding a reason to get involved in the market. QBTS, nothing for us to do. The Qs, right at the mean, nothing for us to do. SMCI, nothing. SPY, nothing. XYZ, close to being a sale, but nothing. Tesla was a buy the other day. We did not take the trade. I did talk about it, but we did not take it, but it did bounce as I expected. Win, nothing. XBI, nothing. And Zoom. Okay, Zoom, which we did take the other day. Look at the bounce. Okay. So again, this is what you're focusing on is a reason to make the trade. And if you get a reason to make the trade, then you want everything to qualify. So you give yourself the highest probability of making that trade and having a profitable trade. That is the biggest lesson I can share with you. So we'll watch and see. I mean, again, obviously we need a pretty significant sell-off or a pretty significant rally. Crude is potentially getting close to being a sale once again. Okay. But we'll see. Again, we're not going to force the trade. We're not going to trade it early. The gold trade that was on has now stopped out with a profit. Okay. Because it moved its stop up to break even. And that's something that, again, to remember. Our first objective is to get a small profit and to lock in and then adjust our stops from there. But overall, here we are. So we're staring at the proverbial paint drying right now. And of course, a lot of the exchanges are making it very challenging to trade some products like gold. I mean, gold, a micro gold margin is over $6,000. Okay. So they're making it very challenging to trade right now. Okay. And so we have to, again, you have to adjust with that and make sure you have enough capital. Now, for most of you, I recommend you stay away from trading gold anyways, because the bottom line is your risk is going to be bigger than many are comfortable with. On one micro, your risk is going to be like $100. Okay. So, I'm trading, when I'm trading with you guys, I'm trading 9 micros. Now I can take the risk. I can handle the risk. I'm not concerned about it, but a lot of people aren't comfortable with that kind of risk on any one given trade. So if I rank the risk products in order, it's the gold is the most. Right now, crude and the NASDAQ are 1 and 2 behind it. And then the rest are easy. I mean, there's risk. There's always risk. Again, don't ever let me think that there's not risk, but there's less risk with still profit potential. Okay. But right now, again, we're getting a pretty good sell-off right now, but we do not have a trade to make right now. We would need this selling to continue pretty substantially, but we'll watch. Again, we're not in a hurry. We're not going anywhere. So we'll continue to see how it trades out and see what shows up here. But right now, again, and if we just take a quick peek at the general indexes across the board, the dollar is getting close, and I would think it would be a seller at par, which is $1. The euro currency is getting close to becoming a buy. Again, this is a speed versus action, which there isn't enough. Notes, which we did tell you to sell at 114. Look at that, getting creamed. Means interest rates are going higher. Bonds, which we were a seller at 119, getting creamed. Okay, interest rates are going higher. Bitcoin, nice little move. Okay, a little bit of a sell-off today, but again, very nice move off of support and off of that oversold area there. Let's just go back and make sure that we're not missing anything here. So again, it's fairly quiet. And I don't think we'll get any trades today. I'm not overly aggressive looking for trades either because of the slowness in the market. And obviously, I'll take them. Gold, really just in consolidation. We can talk about it all we want, but really it's just consolidating, along with silver, which is consolidating, along with platinum, which is just consolidating. And remember that the markets will spend about 65% of the time in consolidation. Copper has been interesting. A lot of talk about copper. I think $6 is a spot to sell it if you trade it. Okay. It's a lot of talk about AI and how much power and how much copper they need. Well, the news is out. They had the big spurt up, and now we're just in consolidation. I would expect it to break lower, and I would certainly look at $6. The grain markets look really strong. They're charging higher, but there's no real trade other than if you just wanted to buy them, I would wait. So overall, we do have a parabolic move in crude, which obviously directly correlated to what's going on in the Middle East. I think you want to be a seller of crude if you can stomach it. Okay. Certainly this is a spot on a daily to sell it. It is extremely overbought. And I bet you if I put up my trade, there you go. Okay. So it is a sell. Okay. Now, again, I'm not recommending, I only day trade with you here. Okay. I don't want you stuck in longer term positions that you're not comfortable with. I am personally short crude. Okay. I actually sold some crude at 66 and 77. So I'm underwater a little bit, but I'm not concerned. I've seen this movie before. And one of the things you want to look at, if you want to understand a little bit better, look at the formation. April crude is trading at almost $80. We go to 77, 74. And by the time you get out to August, you're at $71. So they're telling you that all this is right now is a fear trade. And all the fear is in April right now. And of course, we know the news event that's going on right now. So that should tell us that that's where all the fear is at. So again, just little notes that you can, take place and understand why. And that formation in commodities, they have what they call backwardation and contango. Okay, backwardation is when the front month is the highest price, which is normally related to fear or chasing the market. And the prices get cheaper as you go into the future. Here, I'll give you two examples right now. You can see them for yourself, which would give me an inclination of what my opinion might be if I can get confirmation on the chart. If you look at live cattle, okay, we just had a hell of a run, okay, but live cattle is in backwardation, 238, 234, 232, 231, okay? So prices are going down into the future, which would indicate if you can find a reason to sell in a spot to sell, you want to be a seller, versus the hog market, which is in contango, 95, 100, 110, 112. So prices are going up as you go into the future. That's very common in the commodity space. Okay. And that is a clue as to what direction that they're going to go into the future. Now, again, you still have to find a reason to make that trade, but those are things that you would look at to allow you to make that trade. And I hope that makes sense. If you have any questions, again, don't be afraid to ask any questions on any matter. Okay. Certainly I will be happy to answer them. And I'll always disclose my positions if you want to know. I'm perfectly willing to tell you what I'm carrying, holding long term. Net, I'm always long equities and always hedged. I mean, we actually have a great automated hedging model through Tradier, okay, that does all the trades automatically for me. So I don't even have to do them. I just have to set it up. And when the markets go down, my hedge rolls down, buys more stock. Okay, markets go up, I lock in a new higher basis. And that's all through Tradier. Okay. Hold on one second. So that is something, again, that we want to make sure that we take care of. Okay. And we understand how the market works. But right now, from a short-term day trading standpoint, I got nothing to do. I got nothing to show you. I got nothing to tell you. So I just want to remind you again, remember to protect yourself. Markets are open right now, 241 days a year, but soon it will be 365. You can bet on it. Okay. There's going to be single stock futures at the CME pretty soon. So there's a lot of things coming out. But again, it still comes back down to, do I have a mathematical advantage and a probability that's in my favor? And right now, I have nothing in my favor that I'd be willing to step into, because the speed and the lack of it is more challenging, and it makes it tougher, okay, to do if we have that problem. And again, I look at this and I go, okay, well, what are we going to do? Well, we're going to do nothing. Listen, making a decision not to trade is the same as making a trade. Okay. So why force yourself or put yourself into a bad position when you don't have to? There's going to be plenty of trades throughout any given period of time. So why force yourself into a trade that is not in your favor? Okay. And that's what I always want you to be aware of. So right now, do I have a trade? No. Could I justify a trade in crude, another short? Yeah, I could, but why should I? I'm not getting a signal. I'm not getting a trigger, so it doesn't do me any good to do that. So rather than force a trade and then regret it later, okay, and not get the full benefit from that trade, it's easier to just sit it out and wait for it. Okay. And that's what I look for. And I want to remind you that, every morning I do the market 120, which is just a quick minute and a half of what I think is going to happen during the day, what the markets are doing at the time I do it, which is usually around 7:30 Eastern time. Okay. 4 o'clock my time, 4:30 my time. And I just want you to be prepared for what's going to happen in the markets and give you an idea what I'm thinking and what I'm seeing in the overnight trade. In the meantime, have a great weekend, everybody. We'll see you back here on Tuesday, and enjoy yourself. Thanks, everybody.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.